Hi, everyone. This is Rob Roy of Elliott Options, and welcome to this week's TradeFinder Live. If this is your first time with us, welcome. If you've been here before, you know the drill, but for those of you that are new, let me give you a quick rundown of how this works. First of all, if you've seen any of our videos, you know that this is a requirement. We have to show you this disclosure/disclaimer. It's part of the regulations. So if you haven't seen this before, please take a screenshot of it, read it in detail at your leisure. But the things that the powers that be want us to make you aware of are a couple primary things. Or number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, we have a lot of international subscribers as well, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So from that point, again, take a screenshot of it if this is the first time you've seen it, and read it when you have an opportunity. All right, the way TradeFinder works, we'll go through a brief update of the market. Pretty interesting things going on right now. I think I got a chart to show you that I think is pretty interesting as well. Then we'll review any of our Elliott Wave option trades for our subscribers, our alert subscribers that we've closed out through the week. And I'm actually going to show you the first page of our current alerts. So you're going to get a little bit of a bonus this week, but it gives you an idea of what the alert subscribers enjoy. Then we'll go through and do a review of our recent case study considerations that we've identified through TradeFinder. The difference between TradeFinder and our alert subscribers is with TradeFinder, we identify case study considerations, and then you're on your own to create a trade, adjust it, exit whenever you want. But our alert subscribers, we send out entry alerts, any adjustments, and exit alerts. So that's the difference between the two. We will look for a case study consideration for tonight. The last couple of weeks, we've closed out a lot of the previous case study considerations, and we're going to close a couple more off the list tonight. So we're not going to have a whole lot left to talk about as far as past case study considerations. And if you've viewed TradeFinder for a time, you know that our past trade record through TradeFinder is pretty darn good. And then at the end, with whatever time we have left, we'll open it up for general Q&A. We do have support staff on. If you have any admin questions or curiosities regarding subscriptions, etc., we have people for that. But normally the general Q&A at the end just comes up with you guys give us your favorite stock symbol, and we take a look at what our technical indicators have to say about your symbols. So that's it. That's how TradeFinder works. So let's just go ahead and jump right in. So we'll take a look at the market. You can see that we opened lower but finished higher, finished near the high of the day. So when you see that, before I go into anything else, the first thing you want to do is look at volume, right? And you can see kind of the same type of volume that we've been having, below average volume going all the way back. The last time we had an above average day was the 20th of July. So quite a few days of below average volume doesn't give you a lot of comfort in a potential move to the upside, but yet the market hasn't really been moving to the upside, has it? It's been consolidating right here at this 440 level. If you've watched any of our SPY updates, you know that based on the Elliott Wave long count as well as the weekly count, The next potential target to the upside is 460. We've also been sharing some storm clouds in our SPY updates, things that should be of concern. But the bottom line is you trade what the market gives you. The trend is your friend, as they say. And so as long as the market's in an uptrend, you trade that way. But I don't think it's a bad thing to be prudent and maybe not be as aggressive as you might normally be if you were earlier in an upward trend. We're certainly not in the early stages. We're nearing the end of this upward trend, I would think, but not saying that it can't go higher from here. And one thing that I wanted to share with you, I'll just go ahead and bring up the chart now. This was a CNBC chart that was shown today, as a matter of fact, and it goes to sentiment. And I used to really trade the VIX, and I was a big VIX trader, but that was back when it was on the OEX. Once they've changed it to the SPX, it's not the same. In my opinion, it's much more difficult to trade the VIX. We do look at it. We look at it in every one of our SPY recordings that we post on YouTube, because it is a gauge of volatility and sentiment, but not nearly as accurate as it used to be. And I don't know, if you're a conspiracy theorist, maybe that plays into it. But if you take a look at this, it was an American survey, all-American survey, and the question was, is it a good time or bad time to invest? And so if you take a look at these percentages, 36% said it was a bad time to invest. Only 37% said it was a good time. But go back and look at previous times. Back in December of 2018, it was at 38%, 1 percentage point higher. And from that point on, the market made a really nice move. So these are low numbers. My point is, so if we have 37% saying it's a good time to invest, that means that 73% or 63% are saying, I'm not so sure about that. And so you can see that the bad time stays pretty consistent. So we focus on the good time to invest. And this is it's a lower number. So from a sentiment indicator, when you have a low number of people like that are saying that it's a good time to invest, that's not usually when you get market corrections. Usually market corrections come when people are thinking, yeah, it's great, let's get in the market. And the market's making new highs and headlines like that. But when you see something that's like only 37% say it's a good time to invest, then so if you got 37 and 36, what's that, 73? So there's some people that are neutral, but we're holding steady with the bad time, and we're at the lower end of the range on it's a good time to invest. So hard to imagine a correction coming anytime soon with numbers like that. So my point is that kind of yields a little bit of fodder to the fact that perhaps we do go hit that 460 level. Now, if we look at the moving averages, you can see we're back above the 10-day moving average. We traded below it throughout part of the day, but closed back above it, closed near us. So the closing price here back on the 26th, the close was 441.02. Today we closed at 441.15. Back here on the 29th, we were 440. So we're at a new closing high. With as bad as today felt, the market's at a new closing high. So you take a look at all these things. When we look at the DMI is like, yeah, no, we're not into this upward move at all. Now, granted the fact that we've consolidated over the past week or so, you would expect the DMI to move down a bit, but to dive down like that. And here's something that I wanted to show you that I have rarely seen. And there's not too many things. I've been trading options for 25 years. So there's not too many things that I rarely see. But look at we talk about triangles all the time at Elliott Options, because that's kind of how I made my name in the world of options trader, is creating the specific triangle where you buy the call and put, where you're getting the best mathematical advantage from delta and gamma. So when you take a look at this, we actually have kind of a triangle formation between the two directional indicators. Well, you look back and you can see all kinds of squirrely things going on between those two lines, but where do you see a formation like that where you actually have a triangle in the lines? It just doesn't exist. And when I noticed that, I was like, wow, that's something that you don't see every day. So even the two directional indicators have no clue where we're going from here, but something is getting ready to happen. We're getting ready to have some sort of a breakout between the two directional indicators, which will give us our next move. As we noted in the last SPY update, recently the 50-day moving average has been holding as support. Every time the market corrects, the 50-day moving average holds and we move forward. Almost eerie how that's been working. So the 10-day moving average is the shorter term. The longer term trend is the 50-day moving average. I do include this future line. If you're new, that's the 30-day moving average, but I don't really count that as much of an average for support or resistance. I show the 30-day because my mentor years and years ago, and a lot of other good technical traders look at a 1030 cross as giving you an idea of where the next trend may go. So if the 10-day moving average crosses the 30, that becomes significant. We'll go back and look, and you can see even with all these tests of the 50-day moving average, we didn't really cross it. We did right here, and then it crossed right back. So we crossed below it. We had this move lower, and then once we crossed back to the upside there, in the beginning of November last year, we've been off to the races ever since. So I did want to share that with you. So when we take a look at this, it looks like, we could break from here and move to the upside. If you take a look at the CCI, it's been hovering in this plus 100 range between 0 and plus 100. So it is in the upper end of the range, which that gives you a little pause for, well, if we were to break higher from here, how far can we go till we get to overbought scenarios? So it's dropped down a little bit, but not a whole lot. And with the CCI, if you're not familiar with it, you go back and look at historical extremes. That's how the CCI works. And, plus 200 is kind of where you get to the extreme with the CCI. So with the fact that we're at 100, there's a little bit of room there, but not a whole lot. So it makes you think that maybe the breakout that occurs from here could be short-lived. Well, we're at 441, so we're not that far away from 460. So maybe that's enough to get us there, but really pretty interesting things going on here. All right, the other markets that we've been looking at, the Qs, we take a look at the triple Qs. For a while, they were the market leadership and kind of getting the same type of thing there. In fact, they're a bit more of a triangle for their consolidation than the SPY. Going back to the SPY, you can see that that's sideways, but with the Qs, we've got a bit of a symmetrical triangle here, and we're in the wave 3. I remember Elliott would say that the likelihood is that's going to break to the upside. We showed last week where it doesn't always work that way. We try to present what we like to say to our subscribers as a trader's method of using Elliott wave, etc. And even though Elliott may say, well, when you have a triangle in a wave 3, likelihood is it's going to break to the upside. My viewpoint is, what have you really got to lose by covering both sides? Yeah, we give up some potential gain, but if it breaks to the downside, we're covered. Where if you just go long and it breaks to the downside, then you lose. So, let's take the path of being a bit more cautious, understanding that we can make money whether it breaks either direction. So why not give up a little bit of potential gain to give us a higher percentage of making a profit on the movement of the market? But really interesting stuff with the Qs there. And the ADX diving down makes a lot of sense with a symmetrical triangle in the Qs. Are they going to retake leadership? Or are they going to break to the downside? If they do break to the downside, it's pretty clear where support is on the Qs. It's down there at 340, right where the wave 4 forecast is. Again, if you're brand new, this program is called Profit Source. A lot of people really like it because the charts are clean. I get asked about it all the time, so that's why I bring it up. It's an Elliott Wave software program. I've tried every Elliott Wave software program that I know exists. There may be some that I'm not aware of, but I've tried them all that I'm aware of. And this one's by far the best, and it is programmed directly from Elliott's own mathematical algorithm. There's nobody's own adaptation or changes or tweaks or whatever. It's just pure. This is the stuff that Elliott wrote out, all these pages of formulas that he wrote. It's programmed directly from that. And so I kind of like that too. It makes me feel better about it. But the bottom line is what's more accurate. And so I found greater accuracy with this. So I use it. Well, when you have these numbers here that are not labeled with the colored circles, those are forecasts. So we're not in a wave 4. It's not saying we're moving into a wave 4. What it's saying is if we move into a wave 4, that's the likely point of support. And then if we came down and found support there, then the next extension would likely be to the upside here. And look where that is, up there right around the 400 level. It would be hard to imagine us moving up to 390 on the Qs and not hitting 400. You know how I feel about those whole numbers, that tractor beam effect, the old Star Trek days that I talk about, as far as just attracting the stock to pull like a magnet right to its high number levels, or those big round numbers. So a really interesting look at the Qs right now, something completely different than what we've seen. The IWM, we looked at that last time and was right in the middle, and it's still in the middle of no man's land. It's not giving us any indication of what it wants to do whatsoever. Same scenario as last week. Nothing has changed. So we're sitting here at 220, and it's just done nothing for the entire week. Not a thing. So we still have our 2 levels. And for me, it does have a pretty good pattern of higher lows. But as far as creating a triangle, I wish there was just a touch of the line up here. I know that's being pretty picky, but I look at a lot of triangles, so I like to find the really good ones. It's not awful, but it's not good either. So we just go back to supports at 210, resistance is at 230. I don't know how you trade the IWM until it breaks one of those 2 levels. Then you have a really good directional pattern from there. But until it does that, you just watch it. Also, the XJO, we have a lot of Aussie subscribers and viewers, and we had talked about this triangle pattern. I viewed it as 2 triangles, and people can take a look at it and view it in different ways. But I looked at it from this consolidating triangle, kissing, if you will, an expanding triangle. I don't think it matters whatever you're looking at. Clearly, the Aussie market has broken to the upside. I think that's pretty telling. It's a clear upward breakout. It doesn't have a classic confirmation day because it needs to be 2 days in a row. So you had the big breakout, and then we came back a bit, but we're moving higher again. But a confirmation day is 2 consecutive days. So it's a follow through day. So I don't really have that, but it's a clear upward breakout. And if that holds, a tiny bit overbought, maybe we come back and test that breakout, or maybe we did that on the low on the 2nd of August in the ASX, but looks pretty good to move higher. So when you see that, you want to look at the DMI and look at the setup there. It's not there. If you've heard me talk about the DMI, you know this, but if not, if you're new, with the DMI, it's one of my favorite confirming indicators for Elliott wave. You have good separation between the 2 directional indicators. You have the ADX curling up. And if you read about the DMI and understand what Wells Wilder was creating, they talk about the ADX breaking above 25. I'm a bit more aggressive. I like to look at the ADX breaking above 20. If it's above that, whatever the lower directional indicator is, in this case, the negative. So breaking up above 20, above the negative directional indicator, and between the 2 with good separation between the 2. You look at all those things. Well, there's good separation between the 2. The negative's going down, the positive's going up, the ADX is moving up, but it's right at 15. So it's got to get above that negative directional indicator. It's got to get above 20. It looks good right now as far as a setup, but I can tell you from past history, you can see setups like that and it looks terrific, and it never comes to be. It actually has to happen, so you don't jump the gun. I can tell you that with the DMI being a bit more aggressive, if the ADX does break above that negative directional indicator, if they continue their separation and the ADX does break above 20, you'll have plenty of time to catch a follow through to the upside with the XJO. So don't jump in there too soon. Let's see what the volume says there. Good solid volume in the ASX. Looks a whole lot better than the SPY. I mean, I don't think anybody would disagree with that. Better volume, better setup with the DMI, nice upward breakout. Perhaps we follow along and we get that on the SPY soon. It's not there right now, but that could be coming. But wow, the XJO looks great. All right, so now let's take a look at Facebook. I know you want to look at Facebook, and this is just following exactly what we've talked about. It's uncanny with what's been going on here. So there was the big downward zigzag pattern. Then we had the descending triangle that we talked about. It gave us a head fake. There's exactly why we want the second consecutive day, the follow through or confirmation day. We closed below the support level, came right back above it, got within the descending triangle. Also talk about how descending triangles do not necessarily mean you're getting a downside breakout. And we got an upside breakout. There's no confirmation of the breakout. Nowhere is there 2 consecutive days. We have up day, no follow through. Up day, no follow through. Up day, down day. Right. Look at where that turned. I mean, I don't know how you don't embrace this stuff if it's new to you. I hope you do. Love to see you come along and join with this, because look at that. Right back to the 100% extension, 2 days in a row, touched it on the high, didn't break above it. And now we have a down day coming back down. So a little bit overbought we got. So that makes sense. Would have preferred, if you're really bullish on Bitcoin, you would have liked to have seen it just kind of go sideways here. When you get overbought, and what that means is separation from the 10-day moving average. Those of you that have watched me before, go ahead and say it with me. No security in any time frame gets very far away from the 10-day moving average. So we got there, we got overbought, but one of two things happens when you get that separation with the 10-day moving average. Either the security goes sideways and allows the 10-day moving average to catch up, or it comes back down to it. But whatever one of those two scenarios happens, but the gap with the 10-day moving average will condense. It just does, always. And in this case, Bitcoin came back down towards the 10-day moving average. Now, that doesn't mean that the breakout is over. That doesn't mean we're not going to break above the 100% level. All I'm saying is that it would have been a touch more bullish to see Bitcoin hover underneath that 100%. That was the downside extension of the zigzag. It would have been better to see it hover there, let the 10-day moving average catch up. But this isn't that unusual either, because again, that gap with the 10-day moving average is going to catch up. So we'll see how things move from here. Let's take a look at a couple other markets. Interest rates, which the Federal Reserve came out last week and said they're not even, one of the Fed governors came out and said they think they need to move the timetable up. They need to start tapering next year. But that's not Powell's view, and that's only one vote. And so that really didn't garner, nobody really cared about that comment. So here we have a bit of a doji. Maybe we're going to find a little support here with rates right in this area. Look at the 10-day moving average here. You can see that yesterday we got a little bit oversold, so kind of sideways with the doji today. We'll see if that creates a little bit of a bounce at this point in time. Certainly wouldn't be a negative to see a little bit of support to rates from here. I don't want to see rates tank and go back to where we were before, because that's just way too much economic weakness. Now, if rates were to bounce back up, and then let's take a look at where the dollar is as well, it makes you wonder, because all this conversation about the Delta variant, and we talked about it too, is could you have the same thing being two black swans? We did a Elliott forecast back in January of 2000, back before really the COVID had wasn't talked about much. It was just kind of a rumor out in China and little talked about, and we said that was a potential black swan for the market. And boy, that turned out to be pretty prophetic. So then we said, well, can you have the same thing being two black swans being this Delta variant? But it doesn't look like people are that worried about it. Now, this is just my speculation and my leaning towards conspiracy theorist type of mind. The numbers don't add up to me. The math doesn't work for me. And I'm not in the medical profession. I know people that are, and I know that hospitals are overrun right now. Those things I know are occurring. But they talk about how there's more hospitalizations now than there was back in the height of pre-COVID before there was a vaccine. So if they're telling us that 70% of the population is vaccinated and all of these hospitalizations and cases are coming from the unvaccinated, how does that work? How out of a 30% group are you having more people catch this than you were in this big pandemic where nobody was vaccinated? I just can't make that math work for me. I know people are sick. I know people are in the hospital. I know all that stuff is true. Are 70% of the people truly vaccinated? Is that where the inequity lies? I don't know, but the math makes no sense to me. But the bottom line is the market doesn't seem to really be that concerned about it. I brought it up as a potential another concern, but the market's powering through it. It's kind of consolidated a bit, but it certainly hasn't created anything like what happened back in March of 2020 when it first came out. And so we have more hospitalizations than we did then. But do I need to remind you what the market did back then? I mean, so we have more hospitalizations than we did when this occurred in the market. And now we're doing this. All I'm saying is if you really think about it, it doesn't add up. What are we missing? We're missing something, or we're not being told everything, or something along those lines. That's just my speculation. But I mean, I think you can see my point. We have more hospitalizations than we did back then. The market tanked, and now we've gone dead sideways. Yeah, I know the Federal Reserve is dumping in a lot more money than they were back then, but they were putting in money then too. They have been for a very long time. So I don't know. Anyway, just speculation, fodder to talk about. But to me, the most bullish thing with right now, if you're bullish on the market and you want the market to go higher, is that sentiment chart that I showed you on the fact that only 37% of the people think now is a good time to invest. If you're wondering where the number is that really turns things, when the sentiment gets above 50%, and you might think, well, that's 50-50, but there are always a decent group of undecided. So if you go above 50% thinking, yeah, this is a great time to invest, that's when you want to start to be really cautious, because that's a high number. But 37% is a low number. So there's room there from a sentiment standpoint for the market to potentially go to the upside from here. Now, we've identified enough storm clouds over the past several weeks. There's lots of things to be concerned about. And then you go back to the old adage, well, the market climbs a wall of worry. Well, we've got a big, tall wall with all the worries that we have out there. So we'll see. Maybe 460 is in the cards. Maybe that's where we need to go. So that's the market. That's what I wanted to share with you as far as the market. Now, something different that I wanted to share with you. We usually do or pick an alert that we have sent out with our subscribers. I just wanted to be wide open with you. We are as transparent as we can be because we show everything every single day. So I'm just showing you, this is what our subscribers see. This is our trade list page. These are the alerts that are sent out to our subscribers with all our different portfolios, as you can see here. So I wanted to share this with you. I've got one that I'm going to pick out and highlight, but you can see Apple there's down. We've been in it 6 days. CLF was a profitable trade, 0 days in the trade. That means that it was open and closed in less than 24 hours. Facebook down a bit. J&J is up. We haven't closed that one out. That's still open, but already a 17% gain in less than a week. PLTR down under 10% in less than a week. Google, another 0-day trade, 41% on this impulse strategy trade that we did. That was a call debit spread, 41% in less than 24 hours. CCL, 53%, less than 24 hours. So look at all these trades that were in and out. So it's not like we're not trading to the upside. again, I'm just saying that we need to be cautious on understanding that this could all end. So here's Boeing, 137% in 7 days. So that was great. PDD here, this was one of our strangles, 80% in 16 days. And then EWT is down 30%. That's the Taiwan market. Disney here down 7% in 25 days. Here's the one that I wanted to show you today. We close this one out today. And here's the reason why I want to share this one with you. HLIT. I get this question asked all the time. What do you do about earnings? Do you stay away from earnings? Do you trade through earnings? Do you avoid earnings? My viewpoint has been based on experience, more often than not, if you have a good solid Elliott wave pattern backed by your technical indicators, I don't mind holding a position through earnings. Nothing is 100%. This isn't 100%. It's wrong sometimes, but more often than not, the stock will move the direction that the Elliott wave forecast backed by our technical indicators shows us through the earnings report. So I'm not afraid to hold them. Again, it doesn't always work. Sometimes it goes the other way, but I'm saying more often than not. So it puts the percentages in our favor. So here was the position that we looked at. Now pay attention to this target price. There's the wave 5 forecast right around 10.5. Okay, so we're at resistance, but we've got a DMI that's showing, hey, we look good. Looks like that we're going to be able to break that resistance, but there's a lot of resistance there at 8.5. That's what it looked like. Well, they announced their earnings, and that was after the close last night that they announced earnings. And here's what happened. Take a look at that chart. Now, where did it go to? Right between 10 and 11 is where we moved to. And so 1067 at this point in time. Now that is way overbought. We gapped up, big separation from the 10-day moving average. We're not hanging around. We're going to go ahead and take that gain. And so for this position, this was 62.5% gain in a month. But we did go sideways here for a bit. It did fight that resistance area, even pulled back a little bit. But then the pattern won out and the earnings report came out. And not only did the stock move the direction that Elliott wave had forecast into the earnings, the price goes to the exact price that was forecast in the original alert that was sent out. So remember, there was our target price. Look where the top of that wave 5 bar is. Exactly where we went, 1060. So I just wanted to share that with you, that I'm not afraid to hold a position through earnings. Again, understanding nothing happens 100% of the time. But if you've got a good pattern, you got a good setup. So that was a good trade. That was a really good trade. Here's our mark to market because we are buyers of options. Time decay works against us. So that time that we were consolidating there underneath the resistance level was showing that there was a loss. And then we get the breakout move we're expecting and boom, to the upside. So I thought that was pretty interesting. I thought I'd share that with you with that explanation because, again, it's a question that commonly comes up. But in addition, I wanted to show you, you saw the front page of our trade alert, what everybody sees. You saw the winners and the ones that are down. So that's what our alert subscription provides you. And if you haven't become an alert subscriber yet, what are you waiting on? You know, we do this every single week and we show you this stuff every week. So what are you waiting on? All right, so let's go back and look at our case study considerations from the past. We don't have that many of them left. This one's pretty interesting. POLY here, Plantronics, which was PLT at the time. And you can see initially, this one was a triangle. So we've made a couple adjustments to this one. We did send this one out as an alert to our subscribers. And so if we look at where it's been, it broke down, and it broke down nicely, but it was just a little bit over break even. And so the thought was, all right, we're going to go up and fill this gap likely. And so when it went up, we thought, okay, well, we're charging up. We filled the gap. We're going to probably go up now and retrace the breakout because that's what triangles do. The only way of triangles, they retrace the breakout, consolidating triangles. But then it broke a little bit to the upside. So the original plan was take the calls off once we go back here and let the put run to the downside. But we held it a little bit because of this upward breakout. So instead of taking the calls off with the fact that, hey, we could possibly continue here, because with triangles, you don't really know the full breakout direction, we added puts. So we got unbalanced. We had more puts than we had calls. And so the market went to the downside. And so now we've taken the puts off and we've got calls again, and we had a nice bounce today. So we're kind of adjusting this one back and forth a little bit, and it's working out so far. So ASAI was back on June 1st. This is what we looked at, and then we said last week, let's go ahead and morph this one into a triangle, or adjust it into a triangle. So initially it was a bullish position, but then we had this nice symmetrical triangle. So let's go ahead and create a triangle out of it, which basically meant add puts. And maybe at this point in time, that was a smart thing to do, because now it looks like we're breaking to the downside out of the triangle. And if that continues lower from there, then the puts that were added will work out really well. And then DCI back on the 13th, we set this up. And then last week also had this symmetrical triangle and said, hey, at this point in time, maybe we want to go ahead and add some puts here as well. And then boom, we've broken back to the upside. So a big move higher. We had already moved to the upside. We had a put, we moved higher again. So at this point in time, the upward breakout is there, is confirmed. We're right at a fib resistance level of 61.8. So at this point in time, probably makes sense to go ahead and take your gain on DCI and close that out. Then take a look at this. Here was Quest Diagnostics, and you look at this and boom, to the upside. So let's go back. Where did we close? 136, and now we're at 145. So we've moved 10 points to the upside. Now, how much profit do you want? So I think with that big move there, and then I start to look at this vertical stuff. And if you know me, you know I don't like things that go vertical. What goes vertically up quite often does what? Comes vertically back down. So go ahead and take your gain there in that one if you haven't already. So we're closing that one out as well. So we don't have much left that we've been looking at over the last several weeks. And then last week we looked at Johnson & Johnson, which we did send this one out as an alert to our subscribers as well. And boom, it's moved to the upside. So we have this nice zigzag pattern. Now we're at the 100% extension. So we've moved higher. So we were at 172 and now we're at 174 and change. But we're at this 100% extension, which is where you're supposed to go, with right at a 61.8% B wave correction. So do we go up? Are we going to continue this and follow through up to the 161.8% extension? Well, we look at our DMI to give us an indication, and it's, you know, you barely is that ADX underneath the positive directional indicator. The good thing is that there was confirmation out of the positive directional indicator. You can look at that and say, okay, the positive went up, the negative went down. That's what you want. The ADX curled up. That's good. This ADX needs to stay between the two directional indicators, though, and it just barely is. So I think at this point, you leave it alone. Give it an opportunity to see if maybe there's going to create more separation between those two directional indicators, and we're going to get that move to the 161.8% extension up to 180. So I don't think you close this one out yet. It's only been it's moved to the right direction. It's only been 2 points, so it's not that much of a gain. But the key is we're at a point of resistance, and do we think it can move higher from here? And I think the answer to that is it's worth giving it a try. This is really tight right here, but let's give it a day or two and see if that positive directional indicator continues to move up, because even with the ADX elevated like that, it's only at 28. So it's got plenty of room to go before showing that the trend is overbought and that looking like, okay, that's the strongest part of the move is over that point in time. Still looks pretty good. So let's hang in there and give it an opportunity. So that only leaves us with 3 left. And if you're still hanging with us on POLY or making the adjustments or whatever, but we'll see if ASAI breaks back to the downside out of that triangle, and we'll see if J&J can continue to the upside from here. All right, so let's take a look and see if we can find a case study consideration for tonight, and then we will open it up to your questions. I can see you have some questions going on over there. I always like to look at the momentum scan. If you didn't notice that HLIT that I showed you, that was from our momentum scan, because if you look at this over here, just as a reminder, it was an $8 stock. So what we did was we created this momentum search in lieu of all the craziness of just find a stock that has a heavy short interest on its float and is going to the moon. We wanted to try to find something that's going to give you a little more of a indication of a potential move higher. So here we have natural gas, the natural gas ETF. That's pretty interesting. I wish we would, I've said this for a number of years. We are the Middle East of natural gas. We have tons of it here. Why aren't we pushing for more? So there's some, you see it, buses now, some of the waste management trucks, etc., are starting to be powered by natural gas. We now have a cruise ship that's powered by natural gas, but why aren't we, really gung-ho at that? Can you imagine what that would do for our budget, getting out of the debt that we're in, if we created all this technology using natural gas, considering we have so much of it, like everybody did from the combustion engine using oil? It'd be the same thing, and it would solve a lot of problems. I don't get why we don't do that. I've never understood it, but anyway, nobody cares what I think. So looking at the CCI, plenty of room to move to the upside there. Super good looking DMI. Let's see what we might be done already, because it's not that, it's only another $1 move to the upside. Let's see what the options look like though. It's a tiny bit vertical, not super vertical. What was the symbol again? UNL. LNG is one that I've done before. I've not done UNL, so I'm not too familiar with this one. You can see that. Blow this up for you. December. What are we doing over here? So December, and look at the strikes. Spreads are just so wide. Yeah, it's not going to work. That's not going to work unless they tighten up throughout the trading day. You've heard me talk about that before. Sometimes they do. I wouldn't think the natural gas is that volatile. It doesn't seem like it would be one of those things that would cause the market makers to widen the spreads after the close. I don't really see that occurring. So from that standpoint, I think we're going to have to look somewhere else. Certainly interesting that natural gas, the chart looks great, but unless there's some sort of a major collapsing of the spreads during the trading day, they're too wide, too much slippage for an $11 stock. It's just simply not going to work. All right, so let's try something else here. Let's take a look at our impulse search. Wow, there's 7 of them. So let's see if any of them are in a wave 3. So over here, I told you about this program, Profit Source. It's based from a group in Australia, the Hub organization. And because so many people with Elliott Wave were using it, I guess because I was, they created all of these tools for Elliott Wave option subscribers. So all of the people that own this program on its own that have nothing to do with Elliott Wave, they don't Elliott Wave options, they don't get these different tools. But if you're a subscriber with Elliott Wave options and you're a subscriber to Profit Source, you get these additional tools. And these EWO searches, those are mine. They programmed in my own personal searches on what I've been doing for years to identify potential trades. You see in the record, all you have to do is go to our website, EWOtrader.com, and you can see the record since inception of Elliott Wave options, and this is how I find them. So they program those for you so you can follow along. It's a great learning tool. People send an email all the time asking, well, I see you sent this one out as an alert. I have a question on that, but you didn't send this one out as an alert. Why? What's the difference? And it becomes a learning tool. But what you can do is see they put in a bullish wave 3. So boom, we can click on that. And what that does is it narrows down this list of 7 impulse stocks to see how many of those 7, if any, were also in a bullish wave 3. And there's 4 of them. And look, there's J&J still there. Well, that's good, right? That feels good, considering the fact that we're already in that one. And then we look at Floor Decor Holdings. And look at that volume today, above average volume. That looks good. That's supportive. So I have the oscillator in there, plenty of room on the CCI. Good looking DMI, but we're getting high. See that? I mean, see the move there? We're almost to 40, still good separation. So we'd have to be careful. I don't know how much further this can go. I don't like this at all, that vertical move, but it's consolidating it. And we're getting back on more of a 45-degree angle plane, which I do like that better. I guess if you're going to break resistance, you'd love to see this happen, right? You get a big vertical move and then it consolidates above resistance. So you probably couldn't ask for much more than that. A big, strong move, and then you consolidate above it, and now you're still powering forward in a 45-degree angle. Hard to argue with that. You traded at 124, 135 is the target. With the ADX already nearing 40, it's a big move. Let's see what those options look like. FND. By the way, if you're wondering right now, the futures are down just a bit, 7. All right, well, that looks pretty good. October options. So the orange stuff is out of the money. Spreads aren't bad, not for being after hours. So 26 delta gets you 260 by $3, 34 delta, 410 by 430. That's fine. Yeah, it doesn't look bad. That 140 strike looks pretty good. 26 delta there. And that spread will probably tighten up a little bit. That looks awful good. That's going to be a tough one to beat. So we'll leave that and then go back and see what else we have. Johnson & Johnson we know about. Checkpoint, we already have that. Our subscribers have that. Making a nice move. That's been on the chart for a couple of days. Not a lot of volume today, so that's not super exciting. But the oscillator's moving up, the CCI is moving up, and the DMI is moving up. So a lot of good confirmation there. Would have liked to have seen touch more volume behind it. The volume wasn't there. But what we're looking for here is filling that gap right there. That's what we're looking for. And so, I mean, at this point in time, that looks pretty good, but our subscribers have this one already. So let's try to find something else. Let's look at Vive. This one shows up, Viva Systems. This one shows up just no volume though. Look at that. Volume's not interested in it. Oscillators, ho-hum. CCI looks okay. Isn't that interesting that on this march to the upside here, really the positive directional indicator was going kind of sideways. It's a little divergent there, but it did tick up today. So on this break, it could be like, all right, we're going through consolidation and we're going to break up to this 360 level. We're at 338. That's a pretty good move. Let's see what that one looks like from an option standpoint. Tons of them. Holy cow. Yeah, those spreads aren't bad either. There's the October. Yeah, the 26 Delta has got the same 140 strike again. Huh? Oh, that's it. That is the same thing, and then change it. So that's why. That's why. Sorry about that. So change the symbol. See what happens. Not much different, except that we go out to December options. 136 days out. That's a ways out. And now, I mean, they're expensive, but they're not, the spreads aren't that bad. 50 cents wide on the 27 Delta. That's not bad. That one would have to go into our high value portfolio, though, which is normally on our alerts. We try to keep the fixed amount of risk per alert that's sent out at $500 or less. And then our subscribers came to us and said, because it eliminates some stocks, right? Some of the high dollar stocks, you just can't put on a position for $500 or less and keep a reasonable delta with a reasonable chance to make money, even on a decent move. So they said, hey, what if we wanted to take on more risk? We got larger accounts, whatever. And so that's where the high value portfolio came from. And you saw that listed in our trade list. So this would be an example of something that would go into the high value. So what we could do is we could put VEV in the high value one and put FND in the regular one because those options were cheaper. Before we make a final decision here, let's just take off the wave 3 and see what the other ones are. MMC, we did that one already. That one's back again. Holy cow. So if you were following along with that and you didn't take it off on this spike, you just got another one. But we close it out back here. And then now you got another spike. And boy, that looks good too. That's got better than average. That looks really good. And look at the setup on that DMI. That's what you need though, because look, we're at our wave 5 target. We've gotten there already. We're at the wave 5 target. We're where we're supposed to be. So that comes into effect. But when that happens, the way we do things at Elliott Wave Options is when we've hit our first Elliott Wave target, because remember, you can go to extended levels. Just because you hit the first target doesn't necessarily mean it's over. You don't know, right? It's hard to know. Are we going to go to the extended level or is that it? And so we look for our confirming indicators to give us a guide on that. And at this standpoint, it looks like the DMI is saying, yeah, no, we have plenty of room to run here. So, man, that looks good too. I've been trying not to get, we kind of got carried away for a while where we were doing a whole bunch of them, and I was trying not to do that, but those look good. There's Home Depot too, Cisco. And Cisco looks good. I don't know how we picked this week. There's a lot of them that look pretty good. Well, Cisco we eliminate because there's the setup, right? There's the ADX breaking above the negative directional indicator, but it hasn't gotten to 20 yet. So that goes on a watch list. So that one's easy. We don't do that one yet. Let's see what Home Depot looks like. And where's that? Where's that DMI? Well, that one's right at 20. So how is that? I mean, is it the staying home thing again because of the surge in cases? I don't get this one. But look at that wave 4 right at the 61.8% level. I love that because look at the zigzag that it creates there. That's as classic as it gets. So the target would be up at 400. There you go. Back to the round number again. That's a big move. All right. So let's do this. Let's do FND and Home Depot on the regular portfolio. And then we'll throw in as a bonus VEEV in the high value. So I wasn't going to do that anymore, but it's hard to pick between those. Um, there's so many good ones. So the search is finding us a lot of good opportunities, and you saw our front page of our trade list. Pretty good stuff. All right, we got a few minutes left. Let me take some questions here, and then we'll wrap things up. Scott, the numbers that I've been hearing from the news services are estimating. I mean, they just talked about it, that President Biden had a 70% target by the certain date, and they missed the date by like a month, but now they're saying roughly 70% of the population has been vaccinated. That's just what the news outlets are putting out. You're saying that it's closer to 50 if you look at each state. That ties along with what I'm saying, is that the numbers don't work. If 70% of the people have been vaccinated, how can we have more cases than we did when nobody was vaccinated out of a small group of 30%? So I think that they're fudging the numbers, if you will, on how many people have actually been vaccinated. I don't believe the 70% number. And so it kind of goes along the lines of what you're saying. Is the low DMI on the SPY just reloading and then the trend reasserts itself? Could be. I certainly wish I knew the answer to that question, because I might say, because right now I'm saying trade the trend, but be cautious. If I knew that, then it would be like, be aggressive, right? But I can't say that. I just, we're still making money on upward trades. I showed them to you, and quick ones too that are working really well. But I still think that you have to be cautious and be kind of choosy on what you do. It didn't look like that when we just look at our case studies, but it's because they were so good. The setups are so good. It's hard to ignore them. I really didn't expect to see that. And if you're new with us on TradeFinder, basically what we do with TradeFinder is I show you what I do every night. After the market closes, all the charts are updated by 8 p.m. Eastern time, all the data, and then I run the searches and I look for stuff for the next day. So with TradeFinder, what I do is I don't do it on Tuesdays. I wait and do it with you. So I haven't pre-looked at anything. I've not looked at one of those charts before we do TradeFinder, because I don't think that's fair and equitable, if you will. We're trying to do this as an educational thing, and if I've already preset things, that's misleading, I think. So you're hearing me talk out what I would be thinking in my mind on a normal night. That's how this works. So I wish I knew the answer to that, but I still say at this point in time, until it sets that up, then we have to be cautious. Maybe it does, and it turns and runs. And I mean, certainly enough things going on. The biggest thing to me is that sentiment survey that I showed you. Yeah, I know the Delta is more infectious. I get all that. I understand that. But how can you have more people that have it out of a 30% group when they were telling us how many people had it, and we were getting all the scary numbers and stuff back with 100% of the people with nobody vaccinated? It just, the math doesn't add up. I get it's more infectious. I get people are dying. I get people are sick. I know people that have it and are sick. So I know it's real. I'm not trying to say it's not real. All I'm saying is the math that we're being told doesn't add up. That's all. And I'm not trying to make light of it. I mean, if you have a loved one that's sick or pass away, whatever, from it, I mean, my heart goes out to you. I don't want that stuff. I stay far away from it as I can. How do honest people such as myself gain in HLIT cases? Is by the time we see them, they have come back down. Where did HL? Man, that one was up for a while today. Everybody should have gotten a better fill. You need a louder alarm, Vince. They didn't come back down. Did you not get into it? Is that what the issue was? Because it closed higher than where we got out. The question, does the alert show target price? I've been asked to do that. sometimes I forget to show that. I talk about the setup and where we're going and stuff. And there's times when I show that there's the target price, like I did on HLIT, right? The one that I showed you where the target price was. But sometimes I forget to do that, but I've been reminded of that from our subscribers. And so I'm trying to make become better at putting the target price on there. Now understand it is a target price and other things come into play. You know, if our indicators are starting to show overbought and we haven't hit the target price, we're going to take the profit and go. We're not going to wait until, you know, by God, I'm waiting until it hits that target price. That doesn't work. I've done that before. I've experienced that. You know, if the indicators are still confirming to continue that move, then we hang in there. But if our indicators are starting to show overbought, which we get a lot of gaps and stuff lately, right? With this elevated VIX, you know, we're still at 18 and the VIX came down today, was at 20.5 earlier in the day. So just because we set up a target price, which is why I didn't focus so much on it before, doesn't necessarily mean we're going to hold it until then. But I certainly can put it on there as far as where we're going. Yeah, the momentum scan is coming soon to a theater near you, David. Just hang on. John, do you recommend getting out of a long call 30 days before expiry, regardless of what is happening with the trade, or does it depend? Gosh, I hate those two words. When I was first learning to trade options and people would say that, it would irritate the crap out of me with some, oh, it depends, but it does depend. Every situation is different. Yeah, I know that in the last 30 days, time decay becomes more significant, but as we've highlighted, by going through the math and doing some of the educational things, we have a lot of good educational information on our website as well. The Greeks begin to work in your favor other than theta. Delta and gamma accelerate in the last 30 days. So it's kind of like this catch-22, right? Theta is worse, but delta and gamma are more in your favor. So you have to weigh all that out. And I'm not afraid to stay in the last 30 days because I've had trades that were worthless in the last week and generated a gain because they moved and that the delta and gamma were so high in your favor that you got such an accelerated move. And you don't forget stuff like that. So as a general rule, I know that there's systems out there, but that's marketable, right? People can sell packages of exit at 30 days, hard, fast rule. I just can't in good conscience do that, but I understand people that want to, but I appreciate you asking the question with, or does it depend? And that is my answer. So I use those two words that I so despise when I first learned, but every situation is different. It has to be looked at differently, in my opinion. Sorry, I hit the mic. I hope that didn't resonate in your ears. Vince, MMC only retraced 22%. Could it relabel? Yep. See, Vince has been around a while. He knows that, as I've talked about, Elliott would begrudgingly say 23% counted as a level because that's a fib number, right? But in his mind, 23% didn't really count as a correction. So it would label, but he would like to see it go to 38% before he really felt comfortable that it was a correction. So what Vince is saying is that since it didn't go down to 38%, could the whole thing relabel and it just be a continuation? Well, Elliott would say that's likely. So yeah, I feel that. NVAX. Hey, you guys have been asking questions and haven't been given as many symbols tonight. It's totally different. NVAX, but I like it. I'm glad you're, oh, wow. The ADX, it's getting down there. I'd like to see it go a little bit lower, but that's a nice looking triangle. It really is. So I would start the count here, I think. But you can't click there, you got to go to there. So let's redo that. So I think that's A. Then you come over here, even though it's not as high. But then that gives you kind of the way I drew them with the Elliott wave. triangle. That tool's pretty cool. Man, that looks really good. I don't know what the options look like on that, but that's a great looking triangle. I'd like to see that ADX dive down. I mean, maybe it's asking too much to get a couple more days out of it. I would love to see a couple like these little tiny double dojis here. You got a couple of those, then that would be gold. But that looks good. Barron says it's 70% of adults, not 70% of the population. Well, that would make sense too, but I was just listening to what Biden said. So MCD. Mickey D's, I mean, that you could make it, it's kind of surprising that it's gone down, isn't it? Because you would think, well, New York, did you see what New York did today? You can't go out to eat in New York now unless you're vaccinated. You have to show your vaccination card to go out to eat. To go inside anywhere in New York, you have to be vaccinated. That means going out to eat. So you would think, well, that's going to help fast food, right? And then McDonald's goes down. So that kind of doesn't make a whole lot of sense with the news that came out today. But right now is where the rubber hits the road, right? Because we're at support and it needs to hold here. If it doesn't, it's got further support at 230. But after that, then it's hard to imagine McDonald's not holding at 230. So you could kind of take a shot at it. I mean, it did hit a pretty decent fib level here and backed off, but you hit the 50-day moving average on the low, you're at support. I think if you wanted to be aggressive, you could take a shot at McDonald's right now. Merrick, with an out of the money butterfly work on VIV. Let's look at the options again. You know, we want to do them whenever we can. So let's, it would have to be well out of the money. Yeah, it's just the spreads, right? Trying to keep that because we put that in the high value. So trying to get a butterfly in there so it would be inexpensive is the reason the question's being asked. It's a directionally based trade. See, then you got slippage on 3 different strikes, right? So that's, I would say that it's a possibility because the strikes exist there, but I would hold off on that until we see if those spreads tighten during the trading day, because that's a lot of slippage you're giving away in a butterfly. If they don't, very likely they will, but I would hold off on, you know, endorsing a butterfly until I saw, okay, we're trading, spreads have tightened, you're not giving up quite as much slippage. But other than that, yeah, maybe. Well, Vince, don't wake up the next day. Set your alarm for when the alerts come out, then it rattles your brain and wakes you up. ZM for lockdowns again. Back to Zoom, huh? Gosh, maybe. I mean, that's a zigzag. You can see that. The zigzag is there, but remember when we do zigzags, we need the DMI to be confirming. So that's a thing that we don't only trade zigzags. We trade zigzags that are backed up by our confirming indicators. CCI is fine. The DMI is not quite there. You need to have these 2 directional indicators separated more. It may be a better entry because if it does do that, then the DMI will be there. If we break this little high right here at the A, there's still plenty of room for it to move. So, you know, that's a great looking, look how it's climbing up the 45-degree angle there. So, you know, I like that. And the A wave was 45 too. I mean, it's as bad a classic a zigzag as you could ever ask for. But I think for me, I would like to see that A high taken out and then it would be like, go, because if it does that, very likely that ADX is curled back up. The two directional indicators are separated. We got to get that -1 back below the ADX. Very possible that all that could occur. All right, so that's it for tonight. Thanks again for your attention as always. As I try to say as often as I can, we're very appreciative of you spending your time with us. Time is valuable for each and every one of us, and the fact that you spend some of it with us, again, is very much appreciated. Hope you have a wonderful week. Look forward to talking to you again